Let's stick to Bharti first. And in talks to buy Zains African operations, has issued a term sheet to banks to raise up to $8.5 billion in offshore loans to fund the deal. Smita Bhattacharya joins us to take us through the financial picture. Of course, Mohit will also speak on the same. But Smita, let me start with you. Give us the details of the quantum. And just wondering if indeed such a sum, we've talked about this in the past, but just to reiterate, would this sum burden the balance sheet a bit?
Well, there are mixed opinions on that really, and in fact, like you mentioned, Mohit broke the news yesterday of the funding for the Zain deal, and he did mention there were 10 banks shortlisted, but SBI was the lead arranger, and the foreign currency component would be around $8.5 billion for the funding. Now, talking of the burden on the balance sheet really, Bharti Airtel as a company feels that the burden will not be too much. In fact, they were also looking at equity dilution, which probably will not happen now. And the current net debt to EBITDA is around 0.6, which is lower than their peers like Reliance Communications really. So they have an under-leveraged balance sheet, and they believe that it will not burden their balance sheet too much.
For the first time, actually, we got some sort of confirmation about Standard Chartered's involvement in this large transaction. He, of course, told us on record that they are advising Bharti on this mega deal to acquire Zain's African assets, and that they're hopeful that the transaction will close out very soon, in the next 30 to 40 days. In fact, that's what he's told us. Even while all these developments are happening, we are picking up that the due diligence as far as Zain's African assets are concerned is pretty much close to completion. Most of the banks, Standard Chartered and Barclays, of course, are doing the due diligence on those assets for Bharti. There are obviously other audit firms involved as well who are supporting Bharti on the due diligence for these assets. In the meantime, of course, we do know that the funding or the financing arrangement for this deal has been closed out. About $10 billion in debt, as Smita was also mentioning, being raised, $8.5 billion in foreign currency. I'd like to add a bit in terms of, how Bharti hopes to ensure that this doesn't become a really big burden on its balance sheet. The longer term action will be, of course, to raise equity dilution in some form to replace the debt. But in the immediate term also, we do understand from top bankers that they're creating a special purpose vehicle, to really raise the loans on. So that debt, $8.5 billion of foreign currency loan, will be raised on the books of the special purpose vehicle, which will be backed by a corporate guarantee from Bharti itself. So clearly they're making sure that all of that debt that's raised will not have direct recourse to Bharti's balance sheet. In fact, some investment bankers are also telling us that the longer term plan will be to actually merge that SPV with Zain, so that interest repayment on those large loans can actually be taken out of Zain's books. So clearly a lot of measures that Bharti is taking to ensure that they do not have direct exposure to that entire debt. But let's hear out, more importantly, what Neeraj Swaroop had to say to us when we caught up with him today.
It's a little early to share. Also, obviously, given the fact that, Bharti is a valuable client, we will leave them to share details of the transaction. We are advisors, as you rightly said, and we are extremely happy and still hope, the deal has to conclude. We are confident that it will. Over the next 30-40 days, it should happen. Right. So it's been a pleasure to be associated with the deal.